Well, hello everyone. This is Leslie Jufles with Trading Live Online. I thought I'd give a quick update today on the S&P 500. It's been a little bit since my last update, which was when the market came down and then came back up through what this potential neckline is for this head and shoulder pattern. Now, it's not unheard of that price can come back up and do some testing, which it has been doing, as you can see by these candles, the last several days. So what I noticed today was these trend lines that are coming up here. We had a test here. Notice how the market tested here, tested here, tested here, tested, and then this bar broke through. And then from there, we have not had any follow through bars to the downside. And the market came back up through those trend lines, back up through where this neckline is, and you see all of the testing around that neckline area. Well, this is giving us an indication just with these last several bars that the market's going to be getting ready pretty soon for a breakout. It's going to make a decision on the direction up or down. Well, we've got these trend lines right here to help us with the down direction. However, I want to point out one thing. I see two different potential patterns here. So let me walk through those real quick. I'm going to just grab a line tool that I can use with this to illustrate. So if there's a break down below here, I have the wrong line tool. Let me try again. There we go. That's the one. So let's take the length of this. So let's say that might be an AB. Maybe this is a BC retracement. So that means that we'd have a potential ABCD buy pattern that may form with a little bit of a break below that trend line. So when you're dealing with that type of a scenario with these types of patterns, A, B, C, D, then you have to really look at the type of bar or candle that's breaking a trend line support. If it's a very long bar to the downside, we want to negate that pattern in this type of situation. Now, if the market continues to go sideways, that also may negate the structure of that pattern. All right, now let's remove that one and I'll show you the other pattern, potential pattern that I see forming. And that is a potential triangle. So we take the trend line there, trend line here. I'm going to redo that. That's not all that good. So I'm going to come from this high across that high. So I'm going to connect to the triangle here. So triangle patterns, if this is a triangle, then we're going to see some more up and down trading within this formation. Now it can also come up higher and then come back down, and that might change the structure of that pattern. So you have to have some fluidity when you're doing technical analysis. Nothing is ever written in stone. But let's just assume it stays within the upper bound and the lower bound of this triangle. So we can monitor this for a breakout. So breakout, again, if this goes sideways, then that ABCD is going to be negated. It'll be negated if it's a big, long down bar. So there's two scenarios where we can just take that out. So if we go sideways in here, triangle patterns tend to have a breakout around 2/3 or so into the apex of the triangle. So we might see another few days of the market just going up, down, and sideways. By the way, in case you haven't heard me say this before, that is an indication, you can get an early indication that you're in forming some type of range. When you start to get see the down, you get a swift move to the downside, swift move to the upside, swift move to the downside, but the market really is going nowhere. So that's an indication that you're in a range. And so you can go in and start mapping out some support and resistance levels. So let's look at a couple of scenarios. So if this triangle continues to form, And let's say it has hypothetically an upside breakout. We're going to assume we don't know which direction this is going to break out. So we want to keep an open mind. But let's just say we're going to uh, see an upside breakout. We still have this trend line coming down here for the market to contend with, and it's got to get through that trend line for a more sustained bullish move to the upside. Now, triangle patterns, if this continues as a triangle pattern and it doesn't really change much from what we have outlined, then we can do a measured move target with this by just simply taking the height of the pattern. Let's say a breakout comes around here, around that 2/3 level. You can see that the measured move on that would come right up to where that trend line is. Now, if it breaks to the downside, then the measured move would be somewhere as a test of these lows. Now we want to look at the type of bars, the type of candles that come with a breakout. Uh, that's going to help give us an indication of the conviction of a breakout. So let's say that on an upside breakout, let's say we get a pretty good bar, but then we start to see smaller bars and smaller bars. It's less conviction coming up to this trend line. Let's say another scenario might be that we see big long bars coming out of here. Measured moves don't always mean that the price is going to stop exactly at that measured move. You can get there and then the price can keep going in either direction. You see right here, if it was to the downside, it's coming into this support level. But I've already talked about previous videos that below these lows right here is going to be a negative, in my opinion, for the market. We'll likely see lower prices and possibly down to the measured move of this head and shoulder pattern. All right, so that's it for now. So we've got some price action to be monitoring right here. If you want to learn the structure of AB equals CD, you really want to learn the correct structures and all of the nuances that go with that pattern, come visit me at tradingliveonline.com and check out the introduction to trading with pattern recognition. And that's going to cover all of these harmonic type patterns. Well, have a great day, everybody, and I'll update as soon as I see something on the charts.